For this mock exercise, we're going to take a look at Larson Corporation again. And you need to look at the previous video before this, the video before this, because we've actually done the weighted average method. But now what we're going to do for this video is to actually show you what happens with the journal entries. Okay? So let me go back to the question. I think we did this question already. So it's the same question, and what we're asked to do this time around is we need to actually do the journal entries that summarizes the transactions that affect the working capital, the work in progress, from moving it from the assembly department and hopefully to the other department, in this case the testing department. So what we're going to do is we're going to capture the journal entry of this particular question. So you need to see the video prior to this to get an understanding of how we actually calculate the weighted average cost. And that way you can then best understand how to do the journal entries. Okay, so let's do this question. So the first one is we're going to actually journalize the cost, the direct material. So we're told that this is the direct materials that were added. So that would have been the actuals. So we're going to debit work in progress assembling department, $4,500,000, and we're going to credit accounts payable, assuming that these are purchases made and they were not paid, and these would be the direct materials incurred for October. Now, what do we do next? We're going to take a look at these conversion costs. So these are true actuals, right? Cost added, so these would be actuals. So we need to, again, record that in our T account. Now I'm going to do a T account down here if that helps. And this T account is called the work in progress assembly. Now, there's going to be another T account for obviously the testing department, another T account for the finished goods inventory, because as goods move from one department to the other, you're going to see that the transactions captured that way. So in our assembly department, we would have already had a beginning inventory, didn't we? October 1st. And that was given to us, right? Okay, now how do I know what was the beginning October 1st? Well, you could see that it's the sum of these two, right? 1250 and 402, 705. So that might have been on here. So let me write that down in case you want to know how I got my number. 402, 750 plus 1250. That is 1,652,750. Now I'm going to debit direct materials here. Now the conversion cost, I was actually getting to that. We're going to debit work in progress assembly department again. And that one is 2,337,500. We're going to credit, this time we're going to credit various accounts, because these are things like amortization, it could be an insurance prepaid, because remember, this is supposed to be a conversion cost. Conversion costs are labor and manufacturing overhead. So it would be a culmination of multiple accounts that gets debited to this work in progress. Let me label that as CC for conversion cost. So I'm just updating the T account here. Now, for item number 3, we need to be able to know how much of the goods were transferred out. And if you remember, we did that detailed calculation in that previous video, and we showed you that this is the amount, this is the total cost that were incurred, which is the sum of those two, the beginning and the direct material and the conversion cost, and that's what it is on the debit side. And now we're trying to figure out how much of this 8 million we're going to allocate. So that one is already goods completed. That's the number we need. So we're going to debit work in progress testing department, which is another T account, and that one was 7,717,500. And we're going to credit work in progress assembly department. And you can see that if a company has multiple level of processing of a product that goes from department A to B to C to D, for example, then you'll see that the amount of bookkeeping entries, journal entries that's required is quite tremendous, quite voluminous. So what you'll see later on is we have this concept called back flush costing, where it allows us to eliminate some of these multiple steps and allows us to only capture the transactions on essentially different levels of movement or for reflecting for different critical events in the costing process. So we'll see that in another question. But here we're going to debit or credit the assembly T account. So we call that transfer to work in progress testing, 7,717,500. So that what happens at the end is we have an ending balance of 772,750, which happens to be this number. That's our ending work in progress. Okay? Thank you.